Welcome to QAV, Tony, episode 849, QAV Australia. It is the 9th of December, 2025. What's new with you, TK, in the zoo?
Just living in paradise. Lovely down here today. Playing golf in the
Just
evenings
another
when
day
the
of
course is
you and me in
empty.
paradise.
Mm.
Oh, think twice. You're a
Yeah,
Phil
it's good.
Collins fan?
I am not. Can't stand Phil
No.
Collins.
Mm. I
I
like that
read it was. I
one
saw
album
something
he
on.
had.
I saw something on SNL. Sorry to interrupt. Recently, where he's been kicked out of his home by his ex-wife, and he's now living in a studio apartment.
Oh, yeah, nice. Okay.
Mm.
Wow. Did he remember when he sort of told one of his wives he was getting divorced by a fax back in
Yeah,
the 90s?
yeah. You had that
Uh,
one. Have
Bro-
that one album I didn't mind, or the singles anyway. You Can't Hurry Love, which was kind of a Motown
oh,
song.
right.
That was good. Yeah.
His first solo album was good. I liked his first solo. I mean, come some of the Genesis albums after Peter Gabriel left, like Mama, whatever album that's on. Yeah, listen
Never
to
liked
like that sort
Genesis
of
either.
early 70s, late 70s Genesis. No, okay.
No. I guess they
Just
were always
pull
just like a hangover from the worst excesses of prog rock for me.
prog rock.
Yeah.
Brian Eno card of the day from Brian Eno's Oblique Strategies, which I found in a drawer. The inconsistency principle. What does that bring to mind for you, Tony?
I don't know. The
Brings to me,
markets
it brings to mind
inconsistent.
my TikTok strategy, which is inconsistency. I just shot a couple
Yeah.
of TikToks. Well, kind of a weird week on the market, Tony. Had to do some trading. That's what made it weird this week.
Wow.
Had to sell COG and E-Road, both from light portfolios and E-Road from the dummy portfolio yesterday after their big kerfuffles in recent months with their restating of their lack of or getting out of the US market or de-emphasizing the US market and their CFO
Mm.
leaving, and it has not improved since then, and they finally broke a sell trigger. So I had to let them go and replaced them with Euros Hartley, EZL, Bowl, Boom Logistics, and Friday's FRI, which is Finbar, I think, right?
Finbar, yeah.
Yeah, I don't know why it's FRI. It should be FIN, but it's FRI.
Hmm.
Finbar Resources Industries, something, Inc. I don't know. And added a bunch of stocks to my super portfolio too, because there was a lot of ASX 300 companies on the buy list this week. One of which you're going to talk about in your pulled pork later on,
Yeah. Okay.
which is good. Let me just look at the portfolios, and then we're going to talk about our own portfolios too, because Ed wants to know the dummy portfolio in the all time. Well, yeah, all time, not including the actual start date, but well, yeah, like the first stock not fully invested. But if I just go from the first trade, it's up 16% per annum versus the index up 8.76. If I took it from a little bit later when it was fully invested, it'd probably be better than that. Last 30 days, dummy portfolio is down 0.68% versus the index down 1.55. Current calendar year dummy portfolio is up 26.3 versus the index up 9.5. So it's doing pretty good. The light portfolio for the year to date is up 33.3 versus 9.5. That's not too shabby.
Hmm.
Last 30 days, up 1.79 versus negative 1.5 for the market. And all-time dummy portfolio group is up 19.8 versus 10.2. So that's pretty good.
Hmm.
And because Ed wants to know my super portfolio for the current calendar year is up 23% versus 9.54. It's dropped back a bit for some reason. Don't know what's hurt me here. Don't know. It was up a bit higher by the looks of it. A day ago, 3 days ago, it was up 27. Don't know, something's dropped in the last week. And so that's my super portfolio for the calendar year. For the financial year, it's up 13.5 versus 2.6 for the index. But it's come back a lot. It was up like 19.6 a couple of days ago. Something's really fallen this week. What has hurt it this last 7 days? NWH by the looks of it. Oh, what happened to NWH? NWH has fallen off a cliff. Don't know why. Anyway, so that's that. So that's that.
I thought NWH was doing well. I keep reading about it reaching a new high.
It was until a day or so ago. Something happened.
Okay.
I don't know why yet. Hasn't shown up on a sell alert. So I mean, I think it's still up like a gajillion % since I bought
Well,
it.
yeah.
But,
Sell price is 238. Current price is 505. So it's down 10%.
yeah, let's see.
Recently.
I bought it at in May at $2.81, and it's, as you said, 505. So it's doing okay, but it's dropped off a bit. Dropped off 6 or 7% today. 6.48% today, I think. Anywho, what about you, Tony? What have you? I know that you've got this in your notes.
Yeah, it's been a very
You're having a good year.
very kind year for me. I'm up 35.6% for the calendar year.
You dirty, dirty dog. And
Which
that's with
is-
your, how many stocks do you hold? Like 5 or 6 these days?
Yeah, no, it's 7 or 8, I think.
Right.
Yeah, so the big performers for me have been Parenti and Perseus, both doing really well. ANZ's been good. Super Retail's been up and down, but mainly up and paying a good dividend. Kiwi's gone up and come back, so it's actually getting pretty close to a sell, so that might be something I sell recently. But yeah, that's the big drivers have been the gold miner and Parenti, driller to the gold miners.
Yeah, my top performers are PRU up 107%, NWH is up 84%, PRN up 48%, SSM 47%, Telstra up 29%. My God. ANZ up 25%, Qantas up 17%. So, yeah, I think Ed was asking because he said when we talk about the dummy and the low portfolios, they're mostly low cap stocks, low
Yeah,
ADT
right.
stocks. He wanted to know how the big end of town was going and going okay this year.
Yeah.
By the looks of it.
Yep, and I think it's fair to say the small cap market has done better than the large cap market this year as well.
Right.
From memory, I read somewhere it's up about 15% this calendar year too, so it's been doing well.
And in our US show, I'm going to talk about similar stories coming out of the US, actually. Smaller cap stocks seem to be doing better, or the value stocks, as they call them, are doing better than the big end of town at the moment. But anyway, we'll get to that in the next show.
And we had a look at that. There was an article in the Fin halfway through this year, I think, where someone had done some analysis to say that because of all the passive investing and fund managers hugging the index, that large cap stocks were getting index-like returns, but all the value was in the small cap space, which was a stock picker's market. So if you can pick the eyes out of the small caps, you're getting good returns, which is what a lot of our dummy portfolio does.
Yeah. Well, it's good to see that it still works, Tony. Couple of news stories I've got. Aeris Resources, they're on the buy list this week. AIS. Robert Milner, our old friend from Soul Patts, was a non-executive director and he has resigned for personal reasons. It's kind of weird, isn't it? What else has he resigned from for personal reasons? Just this?
Well, according to the person who pointed it out to us, yes, he hasn't resigned from anything else. I couldn't find any more detail about why, and I think it also happened like 2 days after he was re-elected to the board. So it's
Who pointed this out to us? Came up in my news search this morning.
No, it was
Somebody
in-
sent us a thing.
Yeah, it was a question.
Oh,
I'll
where did that
find
come
it for you. Hang on.
Okay.
From you. It's in your
Oh,
original email, and it is
Trent.
Trent.
Yeah.
Yes.
Sorry.
Yes. Trent said potentially Rob Miller is very busy merging Sol Pattinson's with Brickworks, but seems weird to run for re-election and then cite personal reasons a week later and not step down from any other board roles, as he has also the chairmanship of Sol Pats, New Hope, Brickworks, NED, I'm not sure who that is, and TPG. So is it a red flag?
What do you think?
Don't know. It's a strange one, isn't it? He's on the board of that company because of Eris Resources, because Sol Pattinson's owns something like, well, more than 30% of the company. So they're a big shareholder. So normally, in an orderly transition, he would have just nominated someone else from Sol Pats to take his place, like the CEO or the CIO or someone like that at Sol Pats. So that might happen. That would be my expected outcome. But yeah, it's a mystery. I don't know much more about it.
Mm.
I don't think it's a red flag. And if I don't own the shares, and if I did, in like a situation where I've got a question mark over it like this, I'd just look at the sentiment. The sentiment for Eris is still pretty good.
Right. Okay. Interesting, though.
Yeah,
Interesting.
it's
I
a
don't
watch
think
this
we own.
space, I think, isn't it?
Just looking to see if it's in any of my portfolios. It is not. News from another company that isn't on the buy list this week, but has been recently. Early Pay, EPY. They've announced a market buyback program, which we're now giving companies a score for if they follow through and execute on it, not
Yeah,
just announce it.
we'll check them next year.
Yeah. But we like to see this. We like to see announcements of these sorts of things. They've announced an update on its ongoing on-market buyback program. Oh, so it's ongoing with a total of 2,407. Sorry, let me start that again. Total of 247,998 ordinary fully paid securities bought back on the previous day, adding to the cumulative total of 7,075,887 securities. This buyback initiative is part of the company's strategy to optimize its capital structure and potentially enhance shareholder value. We're in the financial services industry, offering solutions such as invoice financing and equipment financing. Current market cap 55.68 million, average trading volume 171,000 shares. So I don't know what that buyback is as a percentage. It's probably in my spreadsheet somewhere, but I can't be bothered digging it up.
Yeah, it's probably going to be 10% or less, I think. Yeah, usually I can't recall what the corporations law says exactly, but I think anything more than that, they'll have to potentially get shareholder approval for. I could be wrong.
And what are we scoring for? Is it 5%? Greater than 5%?
Yes, if there's less than 5% if there's less than 95% of the shares in successive years. So I am looking at that right now, and at the moment, there's 269 odd million shares, and at the last reported period, it was 272 million. So they're not quite at the 5% threshold yet.
Right. Other news. I was looking at my tracking sheet the other day and I saw that AMA was up 850%. And I thought, well, that's pretty good. Then I realized they had a 1 for 10 consolidation in November. So that's still good, but not that good. But they're still up quite a bit. So it's just a note for anyone out there that is holding AMA. Just your broker or your tracker like ShareSide or Navexa's probably factored it in. But when I went to Navexa, they had put the consolidation in, but it hadn't worked. And it was still showing that it was up 850% and screwing with all my numbers. So I had to delete it, re-add it, then wait 10 minutes for it to click through. But there you go. So I think I bought them for 6.2 cents. And now they're trading at 85 cents. So I had to adjust the original purchase price up to 62 cents. Still okay.
Yeah.
I've got a couple of announcements. Just people who've given me some feedback on how their portfolios are doing. Jerry said portfolio's going great. First couple of years were rough, but this year has been awesome. Fairly concentrated at the moment. 8 QAV stocks, but the average gain across those 8 since I bought them is roughly 90%. Good job, Jerry. Tim, year to date, I'm up 50%, but was as high as 55%. Incredible. Tony may not like it, but I do have a mixture of both US and Aussie stocks, all QAV.
I don't care.
Tony doesn't care.
Good luck to you. Well done.
Yeah. I think the biggest change was to automate my processes and remove the emotion. Very freeing. In 12 months of doing that, I've turned 6% returns into my current position. I understand it's been a massive year on the market, and so I may have still had the same results, but I always got stuck on sells. Automating this isn't perfect all the time, but it's working for me, and I'll track it to see what happens. I've also found I'm doing a lot less buying. Again, this may just be due to the current market conditions. Anyhow, as always, many thanks to you and TK. Thank you, Tim.
Yeah, thanks, Tim.
It's great. Look at, and it, I think the market is obviously having a great year here and in the US, and everyone's probably doing pretty well if you've got any sort of a system. Our system is just one of many kinds of systems, I guess, that people have. But I think the thing that I just want to remind people that are listening today is, this won't last forever. We've lived through a couple of market cycles in the history of the podcast, and you've lived through many more. And what I've come to believe is that you just keep following the system when the market turns down. And, we can have an average year or a bad year, or we had a couple of bad years, and you just keep following it. Don't panic. Just keep buying and selling. You might do more selling, more buying at different stages. It might go from, like lately, I've very rarely, the last 6 months, had to sell or buy anything. Everything's just been tracking along. But like this week, I had to sell a few things. But you just keep following the system, doing what it tells you to do, leave the emotion out of it, because it will eventually turn around again, and then things will be great again. And then the cycle will turn and it'll suck for a bit, and then it'll be great. And you just, like you've said to me over the years, that's just what it does. The market goes up, the market goes down, cycles come, cycles go, just ignore the noise, follow the system. And I've seen it play out now at least 2 or 3 times in 6 years or whatever it is we've been doing the show, nearly 7 years.
Yeah, correct. And we can, doesn't mean the system's going to be locked in concrete for the rest of our lives. We can make changes to the systems if we have experience to back it up. But it's designed, if the market's going down, it's designed to start selling and getting us out before it hits the bottom. And then it's designed to buy us back in on the way up, irregardless of the reasons, irregardless of the time span between those two things. It just, everyone needs a system. And my experience is even people who say they've got systems don't really have a full system.
Yeah.
So, when someone talks to me about their system, I always test them. What's your reason for selling? When do you buy? When do you sell? Do you have a stop loss? Just try and go through each stage of the system that we use. And it doesn't matter whether they're Bitcoin traders, as long as they've got a fully fledged system, it's a lot better than going in blind and winging it and making it up as you go. Because if you do that, every time something new comes up, and the market throws you a new question every day, you've got to decide what the answer is from first principles instead of saying, no, I've thought about this and I've tested it and this is what we do in this situation.
Yeah. Yeah. And, when you say the market throws you a new thing every day, I mean, if you're paying attention to it, for me, one of the great things about the system is I don't need to pay much attention to the market or what's going on, macroeconomic factors, all that kind of stuff.
Yep.
All I need to pay attention to is my alerts. My alert goes off, I sell something, replace it, go back to sleep, and wait for the next alert, right? It's really that simple. Bitcoin, not doing great.
No.
There you go. That's it. I see that.
Speaking of the market throwing us curveballs, the RBA is meeting at the moment too. So
Yeah,
we'll know in
it
an
is
hour
that day.
whether interest rates are up or on hold or down or whatever. And as you said, it doesn't really worry us. Whatever happens, we'll respond to.
Yeah. All right. Well, that's all I got for today. TK, what you got?
Just one article I wanted to cover on Perseus Mining. So again, one of the cornerstones of my portfolio. Interesting situation there. They've owned a stake in a company called Predictive Discovery, which is another African gold miner. And there was a takeover offer lobbed for this business. And then Perseus has joined the fray, and they're now offering a takeover for the business as well. The good things about it are that it's also African-based. Perseus, of course, is a West African gold miner. They don't have anything, though, in Guinea, which is where the Predictive Discovery gold mine is based. So it will give them, will broaden their exposure in Africa to a new jurisdiction. And as we know, there can be some volatile sovereign risk for operating in Africa, although, as the outgoing CEO pointed out when he retired, that Australia is just as bad, if not worse, in terms of approvals for mines as the West African governments can be. So, again, it's a watch this space to see whether West African Resources can get this at a decent price, or whether the other bidding partners raise their price. The kind of market analysis on this is that the competing offer probably won't get raised because Perseus has like a 30% stake in this company, so it's unlikely to accept a higher offer from someone else when it's lobbing on its own. So, we'll see what happens. But Perseus could well pick up another gold mine in Africa soon.
Well, hopefully that's a good thing. And nobody ends up being a guest of the government.
What else have I got? Pulled pork. On Select Harvest is the only other thing I've got. But I think you've got some other questions too, have you?
No.
You have questions?
No. I think so. No, that was it. We've already done
just
them all.
Trent.
Just Trent.
Okay.
And I am disclaiming that I added SHV to my super portfolio yesterday. So before I knew you were doing a pulled pork on it, but there you go.
Yeah, I don't own them at the moment, but I've owned them over the years.
I'd never heard of them before.
Okay, biggest almond manufacturer, biggest almond farmer and exporter in Australia.
I eat a crap ton of almonds every week, so I've been supporting them, I guess.
You should write to them for a discount.
Yeah.
And that's actually an indication of what they're saying, that people are cottoning on to the health benefit of almonds and the market's growing just for almond usage in general. They're saying it's getting about 5 to 7% CAGR per annum. I know that Alex often has an almond latte. I'll often throw a few almond flakes into my cooking. So yeah, it's reasonably healthy for you, I guess. I don't know what the long-term benefits are, but
I saw a TikTok. There's the guy. Have you seen? I don't know if you seen. There's a guy who's done a series on the blue zones on Netflix. Some doctor who's a specialist in long, healthy living. Can't remember his name, but I follow him on TikTok. He did a video the other day saying, actually, almonds are really bad for you after all. We've discovered that there's this thing in almonds that he goes, now I regret all the almonds that I've eaten. Almonds and spinach, the two things that we eat. We have in our two of the things we have in our green smoothies every day. He said, actually, it turns out they're really, really bad for you. So, and I was like, screw it. I'm eating almonds anyway because I like them. So nothing is good for you, Tony. That's the lesson. Well, nothing is good for you anymore.
It does change, doesn't it? Which I guess is what science does. But yeah. Oh, you and I both lived long enough to hear that red wine's good for you, red wine's bad for you. Coffee's good for you, coffee's bad for you.
Yeah.
It just goes on and on. But anyway, at least an extra 7% of people believe that almonds are good for you because they keep buying more of them every year. Select Harvest is one of the only listed agricultural businesses in Australia. There's not many of them on our markets. And I think one of the reasons for that is that agricultural businesses are fairly cyclical. So in the past, like I think the last time I owned Select Harvest was quite by luck, but it went up like about 400% before I sold it in a quick period of time. And the reason for that is because the almond market is dominated by California worldwide. They produce something like 80% of the almonds consumed in the world, and Australia is second to that. But when I owned Select Harvest, this is going back 15 years ago maybe, there was a drought or a bushfire or something in California which curtailed their yield that year, and Select Harvest just boomed. And then, of course, things returned to normal after the weather improved or got colder or whatever it needed to do in California, and the market, went back to stability, and California started exporting 80% of the world's need for almonds again. So I think you need to bear that in mind if you're looking at this stock. It's definitely shot the lights out this year with its performance. It's actually benefited from the Trump tariffs which came in, and that certainly supported its financial statements, at least earlier in the year. And there was an AFR article in April which stated that the Trump administration's trade war has created many losers. The list of winners is somewhat shorter. One of the more surprising, Australia's almond industry, which is stepping in to fill the void left by steep barriers on imports from California, the source of 80% of global production. Sales of Australian almonds to China have been growing for years. Now their biggest rival, the US, has been locked out of a growing market amid a trade war between the world's two largest economies. The sweeping tariffs announced by US President Donald Trump on April 2, his Liberation Day, have closed a lucrative market for American farmers and handed the advantage to others. Chinese buyers faced with a 145% tariff are instead turning to Brazilian soybeans, for instance. So I won't keep reading, but basically, back at the start of the year anyway, China retaliated to the US tariffs by putting a 145% tariff on almonds. I'm not sure where that is now because I hunted down a 5-year graph for almonds, and it is still in buy territory, but it has flattened out since the middle of the year. So I'm guessing that the tariffs have been either reduced or eliminated for California almonds. So that's something else to bear in mind, I guess, as that's another dimension for all this, is what's happening with tariffs. But all those things aside, there's still a lot to like about this business. So they operate 15 farms across 3 states, although mainly in the Riverina, Murray sort of district. So even though they talk about a geographically diverse orchard portfolio, it is concentrated in one overall sector in Australia. They also operate a processing facility, which they use to shell the almonds, because almonds have to be shelled, and vac pack them for export. They export a lot domestically, but also to China, as I said, India and the Middle East. Couple of things have lined up for them this year, apart from the fact that California's tariffs haven't worked for them, but also a metric that they track called new plantings. So new plantings of almond trees are down in the US, in California. So California still dominates the world, but they're not planting as many new trees as they have in the past. And why is that important? Because it takes 7 years for an almond tree to mature. So these particular nut growers are always planting 7 years out. So potentially because of the tariffs, they stop planting. I don't know the reason, but their market will hit a trough in about 7 years, which will also help Select Harvest, because they're still planting. So the other thing which helps Select Harvest is they have a lower cost structure. So California, on average, costs $8.70 Australian per kilogram to produce almonds, whereas Select Harvest is $6.71. So something like a 25% benefit there. So the kind of market dynamics is good for this company, but also they're doing a lot to try and improve their own fortunes. Before I get into their results, I'm just going to go through a history. So they were founded in 1978. They were listed on the ASX originally as Defender Limited, but their origins go back to the 19th century, which saw plantings of almond trees on the Adelaide Plains, and their farms spanned from sort of northwest South Australia across to Griffith in New South Wales. So that's the Murray River, Sunraysia Riverina areas, which is kind of the food bowl for Australia anyway. In the 60s and 70s, they moved from the South Australian area along the Murray up to the Riverina, as I said, which were areas of better land and water access. And then after they did that, select harvest grew significantly. As the acreages grew, they also expanded into the packaging and processing and then exporting. So they become vertically integrated. Results for this year were good. Having said that, their volume was down 15.7%, and a lot of various reasons for that, but including the fact that they lost some of their yield to frost. And that's despite an investment in over 300 frost blowers across the farms. They still couldn't eliminate frost and lost yield because of that, which I guess is a highlight of some of the risks for this type of farming. Even though volume was down, revenue was up 35% with an average price of $10.18 per kilo. And their production costs were largely flat. So that was all cream for them. EBIT was up 246% or $39 million. And earnings per share was up a whopping 2,932% because it was almost break even last year at 740K. And this year they made 22.44 million, cents per share, I guess is a better way of saying it. Part of that was a gain from the sale of water rights, of $5.8 million, and a net reduction in debt of 51%, which also lowered their interest costs. And the water rights thing is very interesting. And I actually have a friend who's a nut farmer, not an almond farmer, but a macadamia farmer. And he talks a lot about trading water rights along the Murray. So banking them, keeping a hold of them, and then selling them at the right time and buying them back at the right time. So again, another risk and dimension that needs managing for this business. But it's good from a QAV numbers point of view. So it's new on the buy list this week. ADT is reasonably high. It's just under $1 million, so 966,000 average daily trade. Stock price I'm doing the analysis on is $4.76, which is 86% of consensus target, but above IV1 of $1.14 and just a bit above IV2 of $3.85, or actually 25% above IV2 of $3.85. Net equity per share is $3.68. So we can't buy it for book, but book plus 30 is $4.79. So we can buy it for just under book plus 30. No dividend. The company tends to be reasonably capital intensive. And when it makes some money, it goes out and buys new machinery or buys new farms. So it doesn't pay a dividend. Stock Doctor financial health and trend is strong and steady. Stockopedia has a quality ranking of 89, which is quite good, and an F score of 8 out of 9, which is very good. Total score in Stockopedia is 97, which is also very good. The PE for this company is 21.4 times, which is not a 3-year low, so we can't score it for that. PropCap is 5.7 times, so that's what's driving its score. Forecast earnings per share growth is 72%, which is good, which means growth over PE easily meets our hurdle of 1.5 times. It sits at 3.38 times. We don't have an owner-founder. I guess it goes back a long way, this company, so no owner-founder on the board. Management don't have a meaningful shareholding, which kind of surprised me, but that's how it is. It's a new buy signal for us, a new 3PTL upturn, so that gets a point. And looking at its equity, it hasn't been growing consistently, so we can't score it for that. All up, quality is 11 out of 16 or 69%, and the QAV score is 0.12. So it's on the buy list, but it's towards the bottom of the buy list. Plenty of risks associated with this company. I spoke about seasonality, and certainly any sort of severe weather is going to affect the yield on this company. And bear in mind, it's a nut harvester, so it only gets one one chance to make bank during the year when they harvest their nuts. Otherwise, it's a cost center for this company, even though they get sales all year round as they export. But it is heavily weather dependent. Luckily, the area it operates in is pretty stable and have been for a long time. So that's one way to mitigate the risk. The California crop is probably its biggest advantage and disadvantage. So as I said before, this year the yield and new plantings are both down, but that may not last and they may turn around at some stage. It's an agricultural business, and it's interesting to drill down into what its dependencies are. One of them that surprised me when I first saw it, but it makes sense, is that they have to buy bees to pollinate the trees. So they're dependent on there being a supply of bees. I think this year they imported bees from WA. So it's that's an interesting dimension to the business and obviously a risk. They get insect damage once the plants become, I'm going to say the word ripe. I don't know if nuts ripen, but certainly mature. They can be attacked by insects, and Select Harvest has been very proactive at trying to manage these risks, and they've just invested in new machines, which they call shakers, which is how they harvest an almond tree. They shake the tree and catch the nuts as they fall, but it allows them to harvest quicker, which avoids more insect damage that they were getting in the past. And I guess they're also reliant on water rights. So at the moment, they've been managing that process pretty well, and they sold some excess rights and banked that this year. But there's always an element of government at play in water rights, and the rules could change down the track, which would be a risk for them. On the positive side, the company at the moment anyway has management which is very proactively managing these risks. As I said, upgrades to machinery, good management of water rights, but they're also fostering closer connections to customers by cutting out middlemen, and that's allowing them to get a better relationship with the customers and more repeat business, but also a bigger margin in their vertically integrated business. So that's good. And then the last thing is that, as I said before, they do benefit when the California crop fails, either due to drought or bushfires or this year tariffs for whatever reason. So it can be a bit of roulette with this stock. And because of their good cost structures at the moment, if there is a tightening in the market because supply is driven up if California produces less, then that is straight cream to the bottom line. So it's very much a seasonal business. It is heavily reliant on what happens in California because they're the price makers, and it's fairly cyclical. So the share price is trading, I think, around 5-year lows. It just crossed its buy low. But to give you an example of how cyclical can it be, I think at the start of the 5-year period, it was trading over $8, and it's now trading at $4.78. So it was trading at its high point at $8.70. And it's gone all the way down to its low point of $2.90, and now it's on the way back up and crossing its trend lines as a buy signal. So that is Select Harvest.
Well, seeing as I just bought it, I hope it continues to get back up to the $8 mark.
Yeah.
Good news for shareholders such as myself. I just asked GPT about the almond risks. Apparently not as bad as TikTok made out, which, is shocking. It's phytic acid and oxalates that both spinach and almonds have that in certain conditions can reduce your body's ability to absorb things like calcium, magnesium, or zinc. But GPT says unless that's all you're eating and nothing else, and you don't have a predisposition to kidney stones and other things, it's probably not a problem. And the benefits of eating almonds and spinach outweigh the potential, prevention of absorption of those sorts of things. So, good.
I'm shocked that someone made a TikTok just for likes.
Well, speaking of which, when you were talking about shaking the tree and letting the nuts fall out, I was like, well, that's when I posted TikTok about why you shouldn't buy Bitcoin or gold. It's the same sort of thing. I just shake the tree and let all the nuts fall out. All the comments, in the comment section.
Yeah, right.
Thank you, Tony. I hope we don't get the pulled pork curse on that one. Statistically speaking, pulled pork's still okay.
Yeah.
Just don't pay attention to it. Don't look at
Well, do your own
Schrodinger's
research.
pulled pork. Too late. I already did it and bought it. So, it's out the way now. Well, is that after hours now, Tony?
I think so. That's all I've got.
I wanted to thank you for recommending Alien Earth.
You watched it? Yeah.
Well, I'm halfway through the first episode and enjoying it so far. Yeah. It's good.
It is good. Gets better.
Interesting. Right. So that's good. You probably didn't see this week's episode of Pluribus based on what you said last week.
No, we're going to wait until it completely drops.
Right. Well, I won't spoil it for you then.
Okay.
And I've been
thanks.
reading Casino Royale for the first time
fantastic.
since probably in my 20s, I think, when I first did the Fleming novels, late teens, early 20s. It should actually be called A Beginner's Guide to Baccarat, because that's really what 90% of the book is about. Yeah. But one of the highlights for me is just how, I wouldn't say it is a little bit misogynistic. I was talking to Chrissy about it, and, I'm thinking, does it date it or not? Because I'm sure there's still a lot of men in certain circles that are misogynistic. And the fact that he's depicting a misogynistic man is not necessarily dating it. I mean, it's sort of shocking to read those thoughts out loud, but I'm sure Donald Trump's inner monologue is not much different to James Bond's.
Yes.
And even his outer monologue, quite often. Calling
what?
journalists piggy and stupid and talking about what he can grab them by and all that kind of stuff.
Modeled himself on James Bond. Well,
He may have.
I read all the James books in my 20s or 30s, whenever it was. I loved them. And, for the writing, it's great writing. But I then read Ian Fleming's biography. And I said to Jenny, this is great. You've got to read this. And she put it down and said, this is the most misogynistic anti-feminist thing you've ever read, and hated it. So there you go.
Well, you may have the answer to this because I've never read his memoirs, but I said to Chrissy, I know when Oliver Stone made Wall Street, Gordon Gekko was not supposed to be the hero, but people saw the film. Plenty of that generation, including myself, came out of it not necessarily thinking he was the good guy, but wanting to be a rich Wall Street mover and shaker. Maybe he knew that Bond was a terrible human being and wrote him to be that, not necessarily trying to portray him as a hero, but no. Okay.
No.
So much for that theory. I was trying to give Fleming the benefit of the doubt.
I'm sort of dredging my memories here, but Bond was based on a number of characters, including Fleming himself.
I
knew
knew
worked for the OSS, yeah.
But the misogynistic bit,
that was all
doesn't
Fleming.
necessarily. That was all okay.
Fortunately or unfortunately, that was Fleming.
Well, I've done a couple of stories on my Cold War show. I can't remember the names of the guys, but they were also friends of Fleming and supposedly part of the inspiration for Bond. Like these guys, these World War II adventurer types who worked for British intelligence, who would just go and travel through Afghanistan and Russia and, Yugoslavia and parachute in and then go find Tito and his revolutionaries and try and figure out how to get him on side and all this kind of stuff. But there was one quote from the book that I thought was great. He's like, it's very early in the book. Bond went to his hotel room and lit his 70th cigarette for the day.
Yeah. He must have put a few out before he finished them.
Wow. 70th cigarette for the day. So anyway, yes, interesting to read. But so far, I'm halfway through the book. There's no James Bondy stuff. There's just him being a misogynist and playing cards.
Yeah, right.
So, what have you been watching, reading, doing, TK?
I went to the
When you're not
Australian
investing?
Open, Cole. last Thursday for a day at Royal Melbourne and followed Rory
Right.
McIlroy around. It was great. Like
Rory
going to a major.
McIlroy.
Yeah,
Is
world
that a
number
real
2.
name? He sounds like somebody from Happy Gilmore.
He wasn't Happy Gilmore, in fact. Yeah, but as a cameo. Yeah, no, he's the world number 2
right.
golfer, Northern Irish golfer.
Right.
Yep. Didn't play too well, but he probably not used to the sandbelt courses, which are a bit different to others in the world. But no, it was good fun. Had a great day out. And got lots of steps in following the golfers around, which was great. Caught up with some friends, which was good. And then watched it on TV after that, on Sunday in particular.
Who won?
A Danish guy called Rasmus Peters. Rasmus Peterson, I think his name is. Yeah. It was his first win ever, so he's a bit of an unknown. Plays on the European Tour.
Wow, good for him.
Yeah. But it's an important... I mean, the Australian Open's had a checkered career. It used to be considered the 5th major back in the sort of 60s and 70s when people like Jack Nicklaus and Gary Player would regularly come out. I think Gary Player won like half a dozen Australian Opens in his lifetime. And then it went off the boil because the PGA started playing all year round. They used to take a break in the sort of end of the year for Christmas, and now they play all year round. So a lot of the best players can't get out here. They have to keep competing on the PGA Tour in the US. And then, I guess probably since Live Golf, apart from the resurgence in golf around the world, a lot of the Live golfers who can't play on the PGA and can't get into the majors because their world rankings have fallen, because once Live started, they couldn't earn world ranking points, which is often used as the qualification for playing in a golf major. So it's kind of the way of the establishment shutting out the rebels. But there are some tournaments in the world like the Australian Open where the winner gets an invite to the US Masters, and I think it's the top 3 players who haven't already qualified get an invite to the British Open. So there was quite a few Live golf players out playing this tournament, which is good to see as well.
Does Greg still play, or is he retired?
He retired a long time ago. He became the CEO of Live Golf and helped to set it up. And he's just resigned, or I think he got the boot from that this year. And he's concentrating on his golf course design business now.
Right. So he doesn't actually pick up a club?
Other than for social
Public?
reasons, that would be it, yeah.
Yeah. And how are your horses going?
Well, did you get the memo about express delivery?
No.
Okay, I think it was its first start on the Gold Coast on Sunday, and it won at 26-1. So that was pleasing.
Wow.
Yeah.
Express delivery, huh?
Could be a fluke,
Congratulations.
as they often are on their first start, and the trainer wasn't aware it was going to run as well. And what also played into our hands was the favourite got scratched at the barriers, so we didn't have to beat the favourite, which helped us. And the odds were reduced because they took the favourite's share of the market out of the payouts, a deduction they call it. But still, yeah, good win first up and good odds.
Big race?
Oh, no, Sunday at the Gold Coast? No, not at all.
Oh, right.
A maiden
win's a
race,
win.
a starting race. Yeah.
Well, that's exciting for you.
It was, yeah.
What music have you been listening to this week?
Oh, I've just been rehashing. I mean, I've been following people on Facebook Reels that keep throwing up new ones. And recently, the ones I've been following have been people who... there's one guy or a couple of guys who perform in U2 cover bands, and they will put the track on in the background and then show you how to play the guitar part to it, which I think is really quite cool and interesting.
Nice. You playing any guitar?
Haven't played for a while.
I pulled my guitar out for the first time, I think, in 2 years the other day, and tried to... I've been listening to a lot of Pink Floyd, so I was trying to learn a couple of Pink Floyd tracks. And that was it. I put it back on the wall. That'll be it for another couple of years.
Yeah. How are your fingers? Your fingertips?
Well, yeah, okay. Including the one that I cut off a little while ago. Yeah, but playing the electric, it's okay. It's not like picking up the acoustic and then having to rebuild the calluses.
Yeah.
Well, that's it. I think that's all I've got for you, Tony. School holidays. got to figure out what to do with Fox for the next 6 or 7 weeks.
Mm.
School holidays are crazy.
Is he affected by he's affected by the social media ban, I guess. Is that going to actually affect him, though?
Well, yeah. I mean, yeah. I mean, we try and ban him from YouTube anyway, but he keeps watching it. So as of tomorrow, we can say it's against the law.
Yep.
He doesn't care about my rules. I'm not sure how much he's going to care about Albo's rules, but yeah, we'll see. It's interesting. I've been having lots of debates with the twins about the social media ban. They're dead against it. They think it's basically the end of times because I think a large part of their audience are 14-year-old girls. But we'll see what happens, see how much it impacts them.
Yeah, right.
Hunter's off to LA today. He's over there for a month. Their mother's going over to spend Christmas in New York with the boys.
Oh, wow.
So they're going to do Christmas in New York for a couple of weeks. So that's nice.
So that's a famous song. It's one of my favourites too, The Fairy Tale of New York.
It's great.
It's
Great. It's the only Christmas song I allow. Yeah.
It'll start appearing again on my feeds pretty soon, I imagine.
Yeah, it's a great song. Yeah, Hunter's working his way through his visa for over there. So if that gets approved and goes through early in the new year, as he thinks it will, then he'll be off, and both of my boys will be living in LA, which will be weird.
Yeah. I know they have to be there for work, but that's probably the worst place to live in the US, I would have thought.
They don't have to be there. They choose to be there. I don't think it, Taylor's been there since March or April. I don't think it's made any difference to his business at all so far. He goes,
Really?
it's a long-term thing. Yeah.
Okay.
There's just lots of parties and
Yeah.
clubbing
Okay.
and,
Right.
film premieres and stuff like that.
Okay. Well, that's the benefit to a 20-something-year-old's life, isn't it?
Met a few celebrities, I guess, yeah.
Hmm.
Although he sounds like he's getting tired of it already. He's like, yeah, I'm so blasé to the whole thing now. It's like, I'm 25 and I'm blasé about living in Hollywood, so I guess that's not good. All right, well, quite a good week, Tony. Everybody out there, glad to hear the results are going well. Just remember, when things turn around,
Stick with it.
Stick with it. Yeah, play the long game. And we'll go talk about a company. We're going to go talk about the FMG of America today. Well, actually,
Yes.
they're the FMG of the world.
Probably.
FMG is the Vale of Australia, really.
Or BHP.
Brazil.
Yeah.
Yeah.
Vale. Yeah.
It's a Vale. It's a very. It's not a nice story. Lots of disasters. Lots of dead people. One of those. I love doing those sorts of American stories. A lot of drama.
Mm.
Anyway, thank you, Tony. Have a good week.
All right. See ya.